Hello again, everyone. I'm excited to introduce our next speaker, Professor Christopher Berry, who is presenting a session entitled Reassessing the Property Tax. Professor Berry is the William J. and Alicia Townsend Professor at the Harris School of Public Policy in the college and Director of the Mansueto Institute for Urban Innovation at the University of Chicago. He joined the Harris faculty 20 years ago in 2004 and directed the Center for Municipal Finance from 2013 to 2023 before taking on his current leadership position at the Mansueto Institute. Professor Berry's research interests include American politics, metropolitan governance, municipal finance, and intergovernmental fiscal relations. He is a member of the American Academy of Arts and Sciences. Please join me in welcoming Professor Christopher Berry to the stage.
Thank you. All right, thank you. Hey everybody, how are you? I have to say this is one of my favorite times of the year to come back and see you come back on Alumni Weekend and get a chance to chat with everybody and learn what you've been working on. So really, it's not only an honor to be able to speak to you today, but a pleasure to be here. How pleasurable it's going to be for you is a different question, because I'm going to be talking about property taxes. And so, really what I want to talk about today are some exciting developments here in Chicago and Cook County that have been reforming and improving the way we do property taxes. Many of these reforms carried out by our own alums, and so I'm excited to be able to talk about that today. Before I can talk about solutions, though, I want to talk a little bit about what is the problem. And so to do that, I'm going to give a little bit of a quick primer on property taxes, how they work in Cook County and beyond, because a lot of people, even with some expertise in local finance, don't understand some of these nuts and bolts that turn out to be really consequential. So I want you to start by imagining the simplest possible political jurisdiction. This has only two homes in it. This jurisdiction has a fancy home, which will be on your left, and a modest home, which is on your right. And the taxes are pretty low in this jurisdiction. The total levy, the total amount of money that needs to be collected is $1,500. So to start with, one important fact, a lot of people think there's a tax rate, we multiply it by the value of the home, and that gets to your tax. And that's not exactly right. We start with the jurisdiction saying how much money do they want. So here the city is going to want some money, the school district wants some amount of money, all the other overlying jurisdictions want some amount of money. We add all that up and that's the levy. So in this very simple world, the levy is $1,500, and the question is who should pay how much? And the principle of the property tax is that each home should pay a share that's proportional to its value. So in this really simple example, the fancy home is worth $200,000 and the modest home is worth $100,000, which is to say the fancy home is worth 2/3 of the total value in the jurisdiction. The modest home is worth 1/3. And so if we got this right, we would divide the levy in that same way, and the fancy home would end up paying $1,000 and the modest home would pay $500. Now, I know this is a fanciful example that there's somewhere you can get a fancy home for $200,000, but just work with me. So that's how it will work. The dirty little secret of the property tax is we don't know the value of your home. Okay? In fact, nobody really knows the value of your home. It has to be estimated. Okay? And this is one of the unique features of the property tax is it's a tax based on an estimate. Okay, so it's not like you go on a sales tax, you buy a TV, you buy your $1,000 TV. We all know the TV's worth $1,000 because we're taxing you at the time you bought it, and we're taxing you on the amount you paid for it. Easy. Okay? Instead, we're going to have this entity called the assessor, whose job is to estimate what your home is worth based on some data that they can get and some models that they produce. And so while we take this for granted with respect to the property tax, I'd like you to imagine for a second that we did income taxes this way, right? Imagine that neither you nor your employer send any information to the IRS. You don't fill out any form, okay? You don't send them a W-2, but instead at the end of the year, you just get a letter from the IRS that says, hey, we know your age, we know your education, we know your occupation. Here's how much we estimated you made. Here's what we think your income was based on that. And here's your bill. That seems absurd and laughable. But when we do exactly the same thing with property taxes, people say, all right, let me get my checkbook. Okay, but that's how we do it. All right, so what can go wrong? Well, lots of things can go wrong, but the thing that can go wrong that I'm concerned about is errors in the way in which we value these properties, in particular systematic errors that lead to lower priced homes being assessed more than higher priced homes. So let me give you an example here of a regressive assessment. So imagine this $100,000 home, the modest home, is actually going to be assessed at $125,000 by the assessor, whereas the fancy home is assessed at only at $150,000, okay? Because the tax is based on this estimated value, this is going to, of course, change the amount of taxes they owe. And so this example in which the assessor has made these kind of errors is going to result in the modest home actually paying 45% of the levy rather than a third, and the fancy home is paying only 55% instead of 67%. Okay, and the result is going to be a tax shift. Some of those taxes that should have been paid by the fancy home, in this example it amounts to $182, instead end up getting levied on the modest home. So we've shifted the taxes from the wealthier owner to the less wealthy owner in this world. Now, this is in some ways a best case scenario for regressive taxation because we can see, if you're the owner of the low priced home, you can see that you've been overtaxed. You say, hey, but I know my home's worth 100, I'm assessed at 125, maybe I'll take some action, therefore, to try to correct this, like appealing. Well, I'll show you another example, which is in fact more common in the world, which looks like this. In this example, both of the homes are undervalued relative to what they're actually worth. Okay? So the $100,000 modest home is valued at only $90,000. Okay? If you owned that $100,000 home, you might think, I'm getting a good deal from the assessor. My home's worth 100, I'm assessed at only 90. Great, I'm going to pay less taxes than I should. What you wouldn't see in this example is the fancy home is also underassessed, but by even more. Okay? So the fancy home is assessed by even more. It's assessed at only $150 when it's worth $200. That still is going to result in the same tax shift. Okay, the dollars are different, right? But it's the fact that your assessment relative to everyone else's is what matters. Right? And so in this example, even though the lower priced home had been undervalued, okay, relative to its true worth, it still ends up paying more of the tax bill, in this case 37.5%, okay, rather than a third. The high-priced home ends up paying even less than it should. Now, what makes this example difficult is if all you saw is your own tax bill as the owner of the modest home, you'd have no way of knowing this. Okay? And in practice, this is the much more common way, and certainly the way in which our previous assessor did things is, what if we just undervalue everyone a little bit, and then we undervalue the rich people by a lot? Who will know? And the answer is hardly anyone. And so one lesson, just practical lesson, if you happen to be a property owner, don't fall into this trap of looking at only your bill and assuming, oh, I've been undervalued, I must be getting a good deal. Maybe, maybe not. Instead, if we really want to know, we have to look at the distribution of the bills, or what everyone else is being assessed at. And in order to do that, we look at something called a sales ratio analysis. And all that means is we're going to look for each property when it sells, the ratio of its assessed value to its sale price. So in this example, the modest home, which was worth 100 and is assessed only at 90, its ratio is 0.9. Okay? Again, less than 1, you might think it's good, but we can see the assessment ratio for the high-priced home, 0.75, okay, 75%. What we want to do is collect this data for all the homes that sold in the jurisdiction, and then look at whether these ratios vary according to the price of the home. If the system is fair and accurate, when we look at this plot of the data, we should see it being on a straight line, like this dashed orange line in my graph. That's a fair system. Now, I'm not saying that every single property is exactly on the line, but if the average for any bin of prices is on that line, that system is unbiased, okay? Any particular home may be paying too much or too little, but if that error is uncorrelated with the price, it's an unbiased system, okay? And so one way we would test is by looking at the actual data to see, does the data look like this dashed line here, or does it look, in this example, the blue line is a regressive tax. The regressive tax is one in which the lower priced homes are systematically assessed at more than the target, and the high-priced homes are assessed at less. And the problem with this is going to result in that tax shift that I talked about. So that area below the blue curve and above the orange curve is the overpayment of taxes at the bottom, and then you see the same underpayment of taxes at the top. And so what we'd like to know, and what you should want to know as an owner is, does the system that you live in look like the orange line, or does it look like the blue line? And we can answer that question with data. So I'll start by showing you some data from Cook County from what I'll call the bad old days. which isn't that long ago. But what you can see, now we're looking at real data. And what this is a bin to scatter plot, meaning I just divided the data, in this case, into 20 equal intervals according to price. And for each bin, I compute the average sale price and the average assessment ratio. So the bin all the way on the right, that'd be the 5% most expensive homes that sold. And the bin all the way on the left would be the 5% least expensive homes that sold, and you get the idea in between, okay? And this is now real data, and so we can see is at the bottom, the homes are systematically assessed at 120% of what they're worth. At the top, homes are systematically assessed at about 65% of what they're worth. And what this is gonna mean is the people at the bottom are paying almost twice as much in terms of the effective tax rate as the people at the top. Right. So when I first started working on this problem in Cook County, which was long ago, my initial thought was this is maybe one of these perverse Cook County kind of things. Because some of you may have heard there's occasional corruption here. And so you might look at lots of kind of perverse things like this and think, well, yeah, this is an only in Cook County kind of phenomenon. But as this work started to get some attention, I started to hear from people in other places saying, hey, we saw this Cook County stuff, and the same thing is happening here, people would say. One of the first places I heard from is Detroit, okay? And so I started doing some work in Detroit. You can see the problem is, if anything worse in Detroit, and I won't go through all the details, but you can see in Detroit, the people at the bottom are paying about 3 times as much the people at the top are paying. Okay? And I kept hearing from more and more places, hey, this same thing is happening here. And so ultimately I ended up just deciding to look at the whole country and do a study of the whole country. And so just to vastly simplify what's going on here is there's about 40 million sales from across the whole country represented in this graph. And what I just did is for each property, I computed its relative price and its relative tax rate. So if you're a 1, that means you're the median for your county. So for every county, so those that will be a 1. A 2 would mean homes that are twice as valuable as the median in their county. You get the idea. And the same for your tax rate. And what you can see is pooling all these data together and looking just at the comparison within the counties in which they're located, that the homes at the bottom, on average, are paying about twice as much as the homes at the top in the same jurisdiction. Okay? So this is a sort of generic problem around the whole country. About 90% of jurisdictions I've shown have some degree of regressivity that looks like this. Now it's important to note one correlate of this is that we have racial disparities in tax rates. Right? Now what this graph is showing you is for every home that's sold, I identify the demographics of its census tract or neighborhood. And I'm going to ask, so I've divided the homes into 10 bins. So all the way on the right will be those homes in those census tracts that are 90 to 100% African American, 80 to 90, 70, you get it all the way, right? And so focusing just all the way on the right, which are the homes in the very predominantly African American tracts, are paying an effective tax rate that's 1.5 times the rate for other homes in the same jurisdiction. Okay? Now, I am not saying assessors are racist or that anyone is intentionally doing this. In fact, the nature of institutional racism is that it results in these disparate outcomes even when no one is intentionally making it happen. Okay? But the end result, because lower valued homes are systematically overassessed and lower valued homes are systematically more likely to be owned by African American families, is that we transmit this inequity in the way we treat homes by price into racial inequities like what you see here. And if you want to see all this put together, it may be hard to see where you're sitting, but you're welcome to come to the front. I don't bite until the Q&A. And so what you can see here, if you can pick out any of these areas that you know, is we're showing the maps of areas that are over and under assessed in each place. And so the purple are over assessed areas and the I guess teal are under assessed. And then probably harder for you to see, but I'll focus on these two, is maybe easier. Then outlined, where the boundaries are outlined, are the majority African American tracts in that area. Okay? And what you can see is this systematic correlation with the places that are being overassessed, that being disproportionately majority African American neighborhoods, and that there's this very high spatial correlation in the assessment ratios in most places. All right, so why should any of this matter? Why do we care? Well, I've already given you one example, which is the tax shift. Even my simple example with 2 households, there was a taxes that should have been paid by the wealthier people are getting paid by the poorer people. And I've estimated the value of these tax shifts in some jurisdictions, and it turns out to be much bigger than the numbers in my 2 jurisdiction example. But I estimate that just under the second term of Joe Barrios, our old assessor here in Cook County, that was about $800 million in taxes. Should have been paid by the top 10% of homes, were paid by everybody else. In New York, that number is more in the order of about $1 billion every year. And so these are big numbers. Secondly, when people are overassessed, they often have difficulty in paying their taxes, and this puts them into a very, I would say, draconian and difficult tax delinquency system that ultimately results in people losing their homes. Fully 1/4 of all the homes in Detroit have been foreclosed on for failure to pay property taxes. I'm not talking about foreclosures by banks. I'm talking about foreclosures by the local government in which people lose their homes. Fully 1/4 of the homes in Detroit. Okay? We could go on about what happens to these homes after they're foreclosed on. They end up getting sold at auctions, often to investors. There's a recent Supreme Court ruling that came down trying to remedy some of that. We'll see how it goes. Okay? We're also talking about the destruction of generational wealth, particularly amongst communities of color where it is difficult enough to accumulate the wealth in the first place. We're talking about people who have attained a degree of home ownership and then lose that to something like a tax foreclosure. I won't go into as much detail here, but in some situations, jurisdictions are also leaving money on the table in the sense that if they were to assess the most valuable property fully at what it's worth, they could either reduce the overall tax rate on everyone or just collect more money. Okay? So there's lots of reasons why we should care about this, and the numbers are big. They're not small. So why is this happening? I said this happens about 90% of jurisdictions. I'm going to divide the explanations into 2 categories, which I'll just call assessor problems and then policy choices we've made. Assessor problems, I think one way to think about this is fundamentally we have a problem of omitted variables, which is there's a bunch of attributes of homes that assessors don't get to see. Okay? And so go back to my example of the IRS tried to estimate your income by just knowing your occupation, your age, and your education. Well, there's a lot of other factors that go into determining your income, right? And many of them, the IRS could conceptually try to collect data on. They know in what market you live and so on, how long you've been in a particular job. But there's plenty of other determinants that they just don't see, like maybe somebody is more talented or hardworking. Okay? And the best they can do is assess you at the average for other people that have the same observable attributes that you do. Okay? And so whenever we're assessing at the average based on the things we can observe, those homes or people that have better or worse attributes that are not included in the model are going to be under and overtaxed. Okay? This is a really hard problem. Requires getting better data and better models, but it's a fundamental problem. Also, that's about the assessor problems regarding omitted things they don't get to see. That pushes them towards averaging. And whenever you average, people above average are taxed too little, people below average are taxed too much. They also sometimes don't do a great job of even modeling the data they do have. If you think about those maps I just showed you, you could see that the errors were very highly spatially clustered. Well, location is something we have very good data on, and yet many assessors are still doing a bad job. Okay? So there's those problems. And then we make some policy choices that contribute to this, sometimes well-meaning ones. With unintended consequences. So assessment increase caps. We say, oh, people's assessments can't increase by more than a certain amount year over year. Often that's well-meaning, thinking of, say, older folks whose home may be appreciating in value, but their income isn't. We want to kind of hold them harmless. But over time, this leads to the fastest growing, fastest appreciating neighborhoods in the jurisdiction are going to be under assessed. I estimate in New York that this policy accounts for about half of the very extensive regressivity that exists in New York is because of policy choices. Right? So there's those 2 things. Now I would say, the 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 2 th I'm not the first person to have discovered these problems, and I would say these problems are known. Certainly, all the kind of data that I'm showing you is data that I had, 15 years ago, and nothing happened. It's kind of interesting when we talk about social impact down to a science, we talk about the need for data to move policy. Data often does play an important role in moving policy, but not by itself, okay? So if only I and a bunch of people who study property taxes know this, nothing is happening. What really moved the needle in Cook County is when the Chicago Tribune wrote not one, but a series of stories on this problem. These stories called An Unfair Burden by Jason Grotto. He ultimately went on to be a finalist for the Pulitzer Prize for these stories. Okay? But they really exposed these problems, communicated them to people. I'm proud to say that we had a Harris Policy Lab that collaborated with him on one of the 3 stories. So this really brought the problem to the attention of people. And without that, all the data in the world wasn't going to make any difference. Okay? Fortunately for us, but not for our prior assessor, these stories came out right in the month leading up to an election. Okay, and so this became a really hot, obviously in the race for assessor, this was a big deal, but it became a big deal, in fact, all the way up to the race for governor. People were taking positions one way or another on this problem. And those of you who are in Cook County probably know the outcome of the election. The outcome of the election is that we elected a new assessor, got rid of the old one. So I think this just illustrates the importance of going beyond having the data and the evidence to having some way to get that out into the world to make a difference. I will say, for this reason, one of the things that worries me very much these days is the decline in local media and local newspapers. We are at the Mansueto Institute, which I run now, launching a local data journalism program this summer precisely to provide these kind of resources and analytical capabilities to local journalists who propose projects to us. So I want to just really emphasize that this is a key learning from this work that you don't get anywhere if you can't get the information out. So in any event, there's an election, we get a new assessor, and reforms began immediately, and this is my take on what the reforms were that were consequential. I'm going to start with people just because this is alumni weekend, and a lot of alums from the university and from Harris School specifically have been involved in this, and I see many in the room. I see Scott and Tara and Dan and Samantha. One of the first people that our new assessor, Fritz Kagi, hired was Rob Ross, who had been one of my students who worked on the policy lab with the Tribune. And so I could go on and on about people that are maybe online or maybe not here with us today who have contributed in one of these ways. So the first thing I want to say is just how proud I am of you guys and the work that you did. I'll show in a minute why, so those of you who may be wondering, but I'm really, really proud of the work that's been done by people associated with the university here. And this is a noted contrast, say, to the way things have been done in the past, when our prior assessor's first move was to hire his own family to staff the assessor's office. I don't think any of you are related to Fritz. Okay, so first was just getting the right people. What made them right is not just coming from the University of Chicago, but they were getting people that had various kinds of very strong data science skills for what is fundamentally a data science problem. Okay, fundamentally what's going on here is the prediction problem. Okay, secondly, the technology. Because this is fundamentally a prediction and modeling problem, the challenge is to build better models and get better data, and they've done both of these things. I don't want to go into a lot of detail on the stat side, but for the sort of nerds in the room, which given this crowd I'm guessing is pretty much everyone, my understanding is that really a switch to machine learning style models, particularly random forest models, made a big difference in advancing the quality of these assessments, and in particular, much more sophisticated ways of modeling variation according to location. Okay, if you think back to those maps, a lot of the problem is the errors are spatially clustered. That should be absolutely fixable with good ways of modeling variation according to location. So these kind of technical improvements. And then I don't want to leave out the real improvements in transparency in the office. So at this point, you can go to the GitHub page of the assessor's office and download their models, the code. You can download the data. I don't think there's probably another assessor's office in the country where this is true. And it certainly wasn't true under the prior assessor, where you had to FOIA even the most minimal of this kind of information. So I think that transparency revolution has been essential. And so I would say that this combination of things, which we could talk about in more detail, really does highlight some of the promise of this kind of social impact down to a science idea, which is we put people with a lot of scientific skills in place with the technology to do their best work, and they've done it. So why am I so enthusiastic about this? Let me just show you what the outcome has been. And these are maybe a little bit small, so I'm going to zoom in on this one here for the city of Chicago. And I'll just show you, these are showing you two, remember I said we're going to estimate those curves. These are two ways of estimating the curves. The green line is what the last assessment done under Joe Barrios, which is our prior assessor. Because the assessments are done every 3 years, those were the 2018 Barrios assessments that he did on his way out the door. And then the blue line is the 2021 assessments done under Kagi. And you can see this radical change in the extent of regressivity in the system. Now, that doesn't mean they're perfect, okay? You can see there's still room for improvement, and I'm not saying anything that anybody in the office wouldn't say also, right? But in terms of the amount of improvement that is gained in one term, okay, we're talking about one term in office, one round of reassessment of each part of the city. To me, I mean, I really didn't know going in what was possible, and I'm just so impressed with what's been done. And if we could go back, so I've shown you a little bit about single family versus multifamily versus condominiums. I don't want to get too deep in the weeds for the audience today, but what I say is there's still room for improvements, right? And again, as they would say too, I think particularly on the condominiums and multifamily, we can see some rooms. I'm not going to break this down for other parts of the county, but you can also see in the south suburbs, there's plenty of room for improvement there, which again is something that they're endeavoring to do now. But in terms of the bottom line takeaway here, dramatic improvement in the scheme of politics and policy, a very short period of time. Okay, so again, just so proud of the work that's been done by them. Just to put this back to the map form, this is what the assessments look like under Barrios. Okay, red means the pockets of overassessment, blue means not. And just comparing that 2018 to 2021, we see, again, doing better ways of accounting for location and variation means that we shouldn't have these highly spatially correlated errors, and we don't. This is a dramatic improvement. And so I think in this kind of one term of the Kagi administration, Cook County has really from being one of the worst jurisdictions in the country, certainly one of the worst largest jurisdictions in the country, to being really a model of not only technically, but also, as I said, on the transparency side. So we've really seen a radical change. So this is exciting. And so now, where do I go? One down, 3,000 to go. So it turns out that assessing is a very localized function, typically done at the county level. We've done, or you've done great work in Cook County. There's 3,000 more counties out there. That sounds daunting. We are starting to see some progress. So this is just headlines from the last month. New York City, we've seen reforms that have led to a court challenge to the inequitable assessments in New York has just achieved a pretty significant victory, and it will proceed. In Detroit, the city council has, in November and then again last month, made important reforms to the system there that require additional transparency and reporting. So we're seeing progress in lots of places. Cook County is far ahead. And it's a slow process. And, when I talked to my dad about this, he's like, you worked on this for like 10 or 12 years in Cook County. You're seeing some progress. How many lifetimes will you need to see this out? And, as I reflected on that, I don't really need many lifetimes. I need many great students. And I've been so privileged to have them here, both here in the room now, but also just over the years I've been here. And I know that the faculty here, regardless of what area they work in, regardless of what area you work in, I feel the same way about the opportunity to have taught people who are not only smart, not only hardworking, but ambitious about what they do when they leave. Okay, and so again, we were talking about any other field, faculty members would be able to point in the same way to the students they've been so proud of in terms of the impact they've had. And so I don't need many lifetimes. I need many great students. Thank you for being among them. And as I said, it's my honor to have spoken to you. And I'll take some questions.
How can the assessor's office communicate the context that property owners need when they get their reassessment to know, whether this is fair? Just because I think people are probably more anchored on what their taxes used to be in terms of absolute terms instead of, relative. And do you think that could contribute to a political backlash in future elections where some property owners' taxes go up in absolute terms and respond to that?
Yeah, so one thing I can do is encourage you to, at the break, talk to the communications director of the assessor's office, who's a few seats down from you. Sorry, chief of staff. And, but in any case, my own view is yes, I think there's a lot to be done to communicate this success, particularly because it means that oftentimes people's taxes or assessments are going up, and it's not for reasons having to do with the assessor. And so I think communicating these things, really ultimately the taxing jurisdictions have to decide how big that levy is. And so even when you're kind of repairing people's assessed values, they could see their actual taxes go up. And that's really hard to distinguish those things. And so I do think that whether that's on the tax bill, I mean, other people are starting to work on like what does an ideal tax bill look like in terms of its informativeness to people. But I do think there's a lot of room to be made. You're 100% right that this is very opaque to the average person who is probably just concerned about did my tax bill go up or down? And a lot of that is due to things that are beyond the control of the assessor.
Thank you.
Other question?
Hi. I remember at least back in 2018, 2017, when you were talking about some of this project, that one of the other big issues is not only were more expensive homes being underassessed, but actually higher income homeowners were more likely to take part in the appeal process. So their underassessed homes were getting even further undervalued. Now that the assessor's office has changed kind of the formula, are you still seeing that pattern? Or has there been a higher appeal process? Is it more evenly distributed across incomes? Or kind of what's been the outcome of that?
So to fill in some details for people who may not know what we're talking about, so anyone can appeal their taxes. Their tax assessment, and it's a long-standing tradition in Cook County that if you're rich enough, you just appeal every time without really even looking at what your assessment is. And historically, that has resulted in people getting lots of reductions, even if they weren't overtaxed to begin with. Some of that's controlled by the assessor's office. Some of that's controlled by a different organization called the Board of Review, and it does appear that tradition continues of the Board of Review granting reductions to people even when they were not overassessed. I would say that's even so that hasn't counteracted these policies. So the results I'm showing you are after those appeals were granted. Okay, so even after that happened, which does undo some of this success, we still see results like this. Where it's been much more consequential, which I haven't talked about, is on the commercial side. So I haven't said much about commercial assessments, but another kind of reform that was done or during the same time by the Kagi administration is to try to more accurately value commercial properties, which have also been historically undervalued as a category. That resulted in a very significant increase in assessed values for commercial properties, and therefore the share of the total tax bill that should be paid by commercial. In other words, it would have been a shift of some taxes off of residential onto commercial, right, which would have lowered, to your point that this is also complicated, that would have lowered average residential tax bills. That was almost entirely undone by the Board of Appeal by granting the huge reductions to commercial properties. So it was more consequential in terms of undoing reforms on the commercial than the residential side.
Hello. I'm a property owner in a lower income area. I live in Bronzeville. I've been a homeowner for about 3 years now. And right now the issue that I'm seeing is I had a property tax bill that was around $1,300 3 years ago. And now we're at $6,000 for a property, and I own a floor in a 3-unit building. The issue that I'm seeing is that we're having a lot of commercial buildings or new build construction buildings that are developing right across the street. In the area that I'm living in, it's becoming a little less affordable to live in, but these are the predominantly Black and brown communities that we are being taxed out of. Like, I'm going from a place where I'm paying $1,300 to $6,000 in property taxes. So my question is, what do we do right now? I'm going to the Cook County's assessor's office. I'm being told to file homeowner exemptions, but I feel like these are things that are incremental. In your opinion and you know, your expertise, what are things that people can do right now? Is it something that can change at this moment, or what do we do as the people who are here trying to just pass on this generational wealth that's becoming more unattainable at this moment?
Great question. So let me talk first from the perspective of what an individual person can do, and then what might be things that can be done more systematically. So as an individual person, I do think the advice you got, I mean, of course you should be taking all the exemptions. There are many standard exemptions that you get that lower your taxes, and there's good research showing that there's not even uptake of in other words, not everyone takes them up, and there's a bias in who takes them up, and particularly in communities of color, people are less likely to take advantage of all the kind of exemptions that are available to them. So for sure, that's good advice. You should do that, and it can result in non-trivial reductions in your taxes. Secondly, you say that your taxes have gone up, if I calculate it right, about fourfold over the last several years. I think there's, again, many possible reasons for that. One is just everyone's taxes are going up, like the taxing jurisdiction, this has nothing to do with assessments, but just the taxing jurisdictions are raising taxes, okay? And so if we don't like that, we're back to politics, right? We might want to say that. But I would say it's worth looking at your bill to try to understand how much, and this gets to your question about how we can make the bills more informative, what you'd really like to know is how much of that increase is due to the changes in my assessments, and how much is due to the increase in the levy, okay? Because there's different solutions to those two things. If you look at that and you see that the increase is coming because of the increase in your assessment, as distinct from just taxes are going up everywhere, you have the right to appeal, particularly if you think the increase is more than what's reasonable. And we could get into more details about how you appeal, but I mean, if you think your assessment's going up more than other people in your area, you absolutely should be appealing. The other possibility, and this kind of sucks, is you describe your neighborhood as improving in various ways and having more commercial activity, and there are parts just when a place becomes better, more attractive, whether that's by having more commercial activities, a new park, better transit access, you name it. When a place becomes better, it becomes more expensive. Okay? And that, like, as I said, kind of can be both good if you're an owner, because if your true value has gone up, that's a good thing. I mean, it's bad your taxes go up, but that means your wealth has gone up, right? And so I think what I'd want to understand is how much of each of these things is at work. How much is the true improvement in the value of my property driving this because the area is improving? How much of it is maybe that the assessments have gone up too much and I want to appeal because I don't think they're right? And how much of it is because just everyone's raising taxes and it's not about that? And I think there's a different kind of action for each of those things. And I do think the city right now is considering, what to do about gentrification in general. Okay, and so if it turns out that the real answer in your case is you live in a gentrifying area that's just becoming more valuable, there's conversations being had about maybe we should try to hold people's taxes down in those areas, and you'd certainly want to be part of that.
Last question. Anyone else?
Hi, thanks. It seems like, forgive me if I'm oversimplifying, but a lot of the issues that you highlighted are going to be inherent to trying to tax wealth more generally. Have there been discussions about changing the starting point from which a property tax or just this kind of area of tax is calculated? Because, I mean, I assume I'm not the only one who had no idea that this is how property taxes are calculated. It sounds kind of bonkers. So is there something to do that really, I don't know, changes the base?
So the answer is there are lots of options. Some are being discussed, and the property tax is the most important source of revenue for local governments, so you can imagine this is a very controversial discussion. The place that I can point to that is, I think, most realistically about to make a major reform is Detroit, where they are talking about switching to a land tax. Okay, so, and there's lots of, we don't need to go into the theory behind that, but there's lots of other potentially good reasons to tax land as opposed to structures in terms of the incentives it creates for people. And it seems quite likely that they're going to do it. Now, we still have to estimate the value of the land, and that, that presents, a related set of challenges, but that's the case. In Texas, they are talking about getting rid of the property tax altogether. That sounds great, until you realize you still would like to pay for schools, and so you're going to need some other kind of tax. And so, as is always the case, the real question is, if it weren't the property tax, what would it be, and how would it be better? And I think a lot of people would like to see a move towards income taxation as a larger source of funding for all kinds of public services, because income taxes in principle are more progressive. I don't see any place where that discussion is really far along. So you say, are there other possibilities? There's many other possibilities. Are there other politically viable possibilities that are on the table presently? Nowhere that I know of, but I do think that the switch to land taxation in Detroit could be a big deal.